Hey guys, happy Friday. It's Trevor at Heritage Reverse Mortgage. It's a great day. It's August 1st. It's a beautiful way to start the weekend and an even better way to start the new month. I have good news to announce to you today. We finally, after the Fed announced again this week that they're not lowering interest rates, we finally got a jobs report from the Bureau of Labor Statistics that was somewhat honest. And this has had a big impact on the movement in the markets, moving in the right direction. And so nothing to do yet. But what this is doing to get me so excited is it's pointing that the market is pivoting. It's telling us that the market is pivoting. Honesty is finally being a part of these reports again, and this is big news. Now it may sound challenging in the way I'm addressing this in terms of questioning the honesty of the Bureau of Labor Statistics. But if you've been following this at all, you'll see why I'm somewhat skeptical about what they've been doing over the past 2 years plus. The BLS has been reporting monthly job creations, and then immediately the next month and subsequent months after that, they have been cutting those revisions and those reports way down. And to give you an example, just within the past couple of months, they reported the initial report said that we had gained 200,000 jobs last month. And then the month after that, they had revised it down to 19,000 jobs. And likewise, there was another one that had been initially reported at 144,000, revised down the subsequent months to 14,000. So you can see if we're having a 90% revision to their initial report, it's either in a lack of integrity or if it's a lack of competence, and you can choose what it is. But the bottom line is that these terrible reports have been holding interest rates higher for longer because the Fed has been watching the job market and using and leaning on that heavily as their reason for keeping interest rates high. So now if we start to see some honest jobs reports coming out, well, the Fed is going to have to drop interest rates. And so my own prediction is that at the next Fed meeting in September, I do believe we'll get at least 0.25% drop in the Fed funds rate. Now, this doesn't directly affect interest rates on mortgages, but there is a residual effect. And again, what this is pointing us to is that finally, after 3+ years of a high interest rate market, higher rates than we've seen in 2 decades, we're starting to see the pivot in the market. Hopefully, we're going to see some significantly lower interest rates by the end of the year, so that you and those that those that need it most right now could benefit by refinancing your mortgage, saving some money, consolidating some debts, and all around just getting on top of your payments so you can deal with inflation a little bit better. So if you have questions about this or anything else, please let us know. Again, we do have our watch list going. We do have target rates set for our clients. If you want to make sure that you're on that list, of course, shoot me an email or a text or a phone call. Let me know and I'll double check. But if you're a past client of Heritage Reverse, I do have you on my watch list. If you are not a past client of ours yet, and you want to make sure you're still on there, like I say, reach out to us and let us know. So have a great weekend. Hopefully by September 1st, I'll have even better news for you as interest rates continue to improve, and we'll go from there. Thanks, guys, and we'll talk to you soon.